Hi, in this video we're going to look at trading the S&P 500 futures contracts on a short-term basis. So the first component of the three we're going to talk about in this equation is looking at our TAS profile breadth net calculations. And as we look at these odometers up top, you'll notice that on a short-term basis we've turned positive on the S&P 500 net profile breadth calculations, meaning that the internals really started gaining some momentum and trading above their short-term balanced areas in a net aggregated manner. On the long term, we're still looking at some headwinds here. So let's drill down initially into the first component, which is our net profile breadth calculations on our 60-minute. As you notice, we crossed into positive territory on the afternoon of January 20th. We reached a low in the S&Ps a little bit before then on the morning of the 20th. So if we look at the overextensions above 70%, if you look at that 91 minus 2, you're looking at 89%. As soon as we start looking at net profile breadth extensions in negative territory above 70, 75, we have to start kind of putting our antenna up and looking for possible reversals on a short term. And when we get the cross into positive territory, then it's very, very much so okay to be long, not okay to be short. That's the first indication. When we look at our futures section and we pull up our S&P 500 multi-cell grid here, we're going to take a look at this 52 and an arrow up. Okay, so we're going to go back into, we're going to look at our landscape view. We're going to see where the level of the market here is relative to our index profiles. Next headwinds, major headwinds we have on this are 1918, and our 240 support now is 1891. As long as our short-term breadth stays positive, and we look at this particular chart, we're going to look into the price chart now. You'll notice that on a 60-minute basis, going back in time, remembering that January 20th afternoon, we crossed into net internal positive breadth territory, while at the same time the underlying futures, the index future, turned positive also. Now we had some headwinds here, and we had a little bit of a pullback, but that profile breadth stayed relatively positive, and we were supposed to be looking at buying support, buying support. And as this profile breadth stays positive on our short term, we need to be looking at buying support, and buying breakouts. The new support on this particular time frame is around 1891. Remember, we've broken stride on our 240s. We've got to look at that orient and stops below in 1891 in this case, and that's the way we're looking at it. So the three components, again, to revisit this is we're going to look at our profile breadth on our short term to trade S&P 500 contracts on the short term. We're going to look at whether we're above or below profiles on our short-term 60-minute by looking at, again, our S&Ps here. And that 52 with arrow up means we've been in a guiding upward situation for 52 straight hours, and we haven't broken below. When that breaks below, it'll turn red, and then all bets are off. And thirdly, we need to look at long-term inflection points to be aware of on longer-term time frames. Now, those long-term inflection points are going to be 1918. That's going to be a little bit of a lid, and support's going to be at 1891. So orient and stops and targets around these long-term inflection points, but using the guiding light situation of the breadth coupled with our short-term 60-minute is going to give us a huge edge in trading S&P 500 contracts on a short-term basis.